Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to Bloomberg Businessweek with Massar and Tim Stenovec on Bloomberg Radio.
Well, about 2 weeks ago, back on November 2nd, Levi Strauss came out with earnings and they lowered their revenue growth outlook for the full year. The results showed that Levi Strauss is making progress toward its goal of becoming more reliant on its own stores and on e-commerce, but weakness in other areas is also holding the company back. Shares fell as much as close to 12% that day. They ended up closing down 7.7% on the day after those numbers came out. We got back with us Harmit Singh, Chief Financial Officer over at Levi Strauss & Company. He joins us here in the Bloomberg Interactive Brokers studio. Good to see you. Welcome.
Yeah, thanks for having me, Tim and Molly.
Hey, if you're watching us on YouTube or Bloomberg Originals, you can see that you are just head to toe in denim right now.
H2T.
You got I don't know which Levi's jeans you're wearing.
These are our new looser fits, the 568.
Okay, he's got the 568s on. Yeah. You got the denim shirt, which looks great.
Right. It's the Western wear.
The Western wear, okay.
Yeah, beyond. We've signed up Beyonce.
Yeah.
We're
going to talk about that.
We'll get to
talk about that, right?
Okay, sure. And you need a jacket, so you got a denim jacket on as well.
Yeah.
But then what about the outerwear jacket when you go outside? It's cold here.
I know, but this jacket does protect me. The good news is we have a line of outerwear just hitting our stores.
Look at that.
For the winter
He's so
season.
ready.
My question, do you always dress like this every day?
Yeah, I mean, that's the beauty of working at Levi's. You can wear the brands. You can wear it to work. You can wear it to interviews like this. You can wear it to a formal event, and people give you the latitude.
Well, it's good right now because no question denim is having a moment. So you don't really look out of place when you're wearing a lot of denim. But I'm wondering how long that lasts. Because there have been moments like this when it comes to the history of the company, when it comes to fashion over the last few decades, where denim has gone in and out. How do you think about that as CFO?
Yeah, no. So we are the market leader, and as the market leader, we're market leader in men's, we're market leaders now in women's. As the market leader, our responsibility is to lead trends and drive people towards our products. We're focused on what we call denim lifestyle, which is more head to toe across both men's and women's.
You're repping it head to toe.
Yeah, and I'm repping it. You can see, the other folks, but denim is having a moment, as you call it. The last cycle started with the skinny, way back in the late 2007, 2008. That lasted for about 8-9 years. We were the first to introduce the looser fit just before COVID, and it took off post-COVID. And the other thing that we really focused on is because the world's become a lot more casual after COVID. You see it in a hybrid work culture, you see it in other social occasions, and so we are making a stronger pivot to the non-denim piece of our apparel. For men, we've got something called Performance Tech. It's like the ABC Lulu pant, and that's really gaining traction. And so as we think about, growing the business, it's about owning a larger share of the closet without, taking the eye off the ball on what we're really known for, which is denim. And so it's all about denim lifestyle.
I would think a lot of it right now, too, is about wide-legged denim. I mean, that is just we had a great story about this recently about, women in particular who are buying, roughly $100 wide-legged jeans and then the $700 wardrobe to go along with it. What? Tim's eyes just bulged. So yeah, all of the rest of maybe the crop sweaters and jackets, because if you've got a waist that's coming up kind of high, then you want the shirt to kind of hit roughly around there. I'm learning this. I have a stylist. She's telling me all about it. So obviously, Harmit, you could tell us more about this too.
It's actually, you hit the nail on the head. I was going to talk to you about it. But it's not only about bottoms. And as the fits for the bottoms change, so do the tops. And so as we think about denim lifestyle, we are also focused on growing our tops business, which was up nicely in quarter three. It's up 8%. But overall, what you saw in quarter three largely was that Levi's as a brand grew 5%. And that's the strongest growth we have had in Levi's over 2 years. Sequentially, it's getting better, and that's why, as we talked about quarter four, while we took our overall guidance for the year down, our belief is sequentially quarter four is slightly better than quarter three.
Well, if denim is having this moment, then why don't you think investors are buying into this? Levi Strauss shares up about 12% so far this year, underperforming the S&P 500. Why aren't investors buying into this?
Yeah, I think what we've done this year is we've narrowed focus into Levi's and Beyond Yoga. We announced the exit of Dockers. Dockers was underperforming. We had a smaller footwear business really based out of Europe. We are exiting that. And we were present in Target through our Denizen brand. We introduced a Levi's Red Tab in Target that, had a good run. So, we thought it's better to focus on Levi's and Red Tab. And so as you think about it, I think the fact that we are transforming in the year while we're trying to perform and performing really well on Levi's is, I think, why people are just saying, okay, let the transformation, get complete and we'll buy in. But overall, Levi's as a stock over the last 12 months has had a decent run. We're long on the stock. We're long on, trends of the business. Our longer term goal is to take the $6 billion business and make it more like a $10 billion business, improving our operating margins by a couple of percentage points. The other thing that is happening in the business is this transformation into more of a DTC first business. It doesn't mean DTC only. It does mean, we lead with DTC, which is our stores, our e-commerce, and wholesale complements our direct-to-consumer business. And that transformation is taking shape. Today, DTC is about half our business. When I joined, it was about a fifth of our business.
We're going to get more on direct-to-consumer in just a minute, but you
Sure.
mentioned Dockers, so I wanted to talk to you a little bit about the options for Dockers. You did announce that you're looking to sell the business. When I heard that, I think to myself, this is like a perfect fit for Authentic Brands Group. Jamie Stalter is like, Jamie Stalter's group. He's got Airwalk, Aeropostale, Billabong, DC, Greg Norman, Eddie Bauer, Champion, Fry. I mean, I'm only down to F at that point in the alphabet. He's got everything over there, down to Volcom. Does that make sense?
I won't comment about prospective buyers. I would say that the reason we announced the exit of Dockers, we created Dockers. Okay, so it's a homegrown brand that had a wonderful run for a long period of time. We launched Dockers just to take advantage of the casual Friday that was set in the mid to late
Now every day is
80s.
casual Friday.
What has happened is it's in a lower growth category, and we're a firm believer that what this does is unlocks Dockers with somebody who can take it to the next level, while we concentrated on taking Levi's to the next level. I've been part of spin-offs and I've seen that happen. To your question about prospective buyers, we announced it so that we would probably hear from prospective buyers. It's early days. Our intent is to sell it, and intend to sell it to buyers that can not only take the brand to the next level, protect as many employees of Dockers as they can, and we'll see where this goes. Phones are ringing, which is the good news. These transactions take time. When we have something to talk about as to who's the prospective acquirer, we'll definitely talk about that.
Yeah, just call us.
Yeah,
Let us know.
Yeah, just pass their phone calls maybe on to us when those phones are ringing. What kind of timeline do you think is reasonable to look at something like that to really complete that kind of a spin-off?
It's a strong brand, and in our view is something like this, can take 6 to 9 months. What we're really interested is ensure that it's the right buyer who does the right thing for the brand, and so we're going to do it in a fast way, but we'll do it the right way.
Right. Well, I think this is the time where we pivot to Beyonce.
Go.
Sure.
Tell us more about this partnership. I think a lot of people want to know about it and what exactly her role is with the brand here. Is Beyonce straight up designing Levi's clothes now? Can I get a Beyonce designed pair of Levi's jeans?
No, it's not about a product collaboration. It's about a partnership with someone. She's an icon. She's been in the center of culture. Her values and our values resonate. She's been a supporter of the brand for years, for decades. And when she named a song after
Cowboy
us,
Carter.
Cowboy Carter, and the song Levi's, that was organic. She, in 19, I remember she was at Coachella and was wearing our shorts. Again, a very organic, thing that she did, and product sales went up on the shorts. So we kind of sat back and said, it's been a great partnership. Could we take it to the next level? And having somebody like her support our brand, support the iconic apparel that we have, the 501s, for example, the T-shirts. Actually, I think we think it's a win-win for both Beyonce as well as us. Plus, we're leaning heavily into driving our women's business. About a third of our business. We see no reason why it shouldn't be half our business.
Right.
And I think she has many fans around the world, and I think the combination of the two brands will make a difference.
Just about 50 seconds, and then we're going to come back for more with you. Have you already noticed a higher sales figure or more loyalty on the back of this campaign?
Yeah, it's early days with the campaign. This is it's a 12-month partnership. We just launched the first chapter. We'll have 3 other chapters. But what I can say is, difficult to link, brand advertising with direct sales. But what I could say right now is, as we closed quarter 3, which we just reported, women's sales were up, close to 11%. Iconic 501 was up double digit, and so that's what we believe continues over time.
Harmit, stick with us. We're going to come back with Harmit Singh, Chief Financial Officer at Levi Strauss & Company. He joins us here in the Bloomberg Interactive Brokers studio. You're listening to and watching Bloomberg Businessweek. I want to get right back to Harmit Singh, Chief Financial Officer at Levi Strauss & Company. He joins us here in the Bloomberg Interactive Brokers studio. We were chatting a little bit, and I was telling you, you've been at the company, since 2013?
Yeah, that's right.
You guys went public about 5 years ago, again, on the New York Stock Exchange. Right. I was at that IPO because I was working on the floor of the exchange back then. And you guys were able to do something that I think in the, more than 100-year history of the New York Stock Exchange has not ever been done before, which is allow jeans on the floor, on the trading floor there. There's a lot of rules at the New York Stock Exchange. One of them is no jeans allowed. I came in that day, everybody was decked out in jeans.
And wasn't everybody looking great?
Oh, yeah.
Levi's jeans, I assume.
Levi's jeans, yeah.
Yeah, it was Levi's jeans, and, that was, part of the deal we did with NYSE, as we were debating NYSE or NASDAQ. We said, hey, if you can change the flow on the day of the listing and make it a denim flow, we are in, and they were able to do that, and it was a wonderful, wonderful morning, and, I think beginning of a new chapter for the company.
Understanding how things work between the New York Stock Exchange and the NASDAQ, I think that they probably didn't even have to check with anyone. They probably just said yes at that moment. Harmit, I promised we'd get back to the idea of going direct to consumer and building that relationship one-on-one with the consumer. Nike tried to do this over the last few years, and they really alienated the Foot Lockers of the world, who were such a big part of their business. And now there's a new CEO at Nike. They're trying to turn that ship around, repair that relationship with those retailers. How do you do this but not alienate the brick and mortar stores who for so long have sold your products?
Yeah, I know. We love our wholesale customers. The way our strategy, the second pillar of our strategy is DTC first, but it's not DTC only. The wholesale
DTC, direct to consumer.
Direct to consumer. Wholesale is a big complement to how we're going to grow the business. The reason DTC is important is allows us to provide more of a head-to-toe assortment. We can drive the consumer experience, and it's actually a proof point for wholesale retailers to see how the product is taking shape. So our new product introductions, and we have a wonderful product pipeline, hits the DTC flow first. The wholesale customers see how it's performing, and then they buy into it. We need wholesale customers largely because, to be the market leader, we have to reach out to consumers, far and beyond. And the only way to do that is having a combination of a successful DTC business and a successful wholesale business.
So I imagine ideally, you would love to see the DTC base be new customers, adding like net new customers to the business. But is there a risk that this cannibalizes the wholesale customer and that they shift over?
Yeah, it's a very good question. I've been asked that a couple of times, and we have not seen any evidence of cannibalization. The other piece is, in the US, our DTC offer is what we call Tier 1 and Tier 2. So it's the best and the better. The offer for wholesale customers more Tier 3. We are talking to a few wholesale customers to introduce our Tier 2 offer, because in the top 50, 60 doors, there is a consumer that wants the higher tier product. So we're not seeing cannibalization. We also don't see cannibalization between the different two channels within DTC, which is e-commerce and our stores. And in fact, consumers now, as you know, like a seamless shopping experience. So our view is that both channels can grow. DTC grows probably faster because we control the channel, we're able to drive the experience, and have a head-to-toe assortment.
We're talking a lot about the U.S. election. It's top of mind here for us. My question is not about the politics of this, but about how you're potentially preparing for another Trump administration, given the tariffs that you experienced during the first Trump administration, when Trump put European steel and aluminum exports, tariffs on those, and then you guys were hit with tariffs on jeans. So there's that part of it, and then a potential more tariffs between the U.S. and China. How do you plan for that?
Yeah, we've been around for 170 years, and we've seen different administrations. The business and the brand has grown through different administrations. And so from our perspective, we believe that, and when we guided Q4, when we talked about a sequential progression, our belief is the brand continues to grow. To your question about tariffs, a couple of years ago, we were importing from China into the U.S. about 15-16% of the product. Over the years, we've scaled that down, so the imports into the U.S. from China is about a percentage point.
Where are you going instead?
And because we have a supply chain, we're able to cross-source it across different geographies. So, we've been able to cross-source it from other countries in Asia. Think Vietnam, think Bangladesh, think Pakistan. And that's really what's really helped us. The cross-sourcing strategy, beside the fact that we're not concentrated significantly in any one country, makes a difference. And so our view is that, any administration, will be able to continue to grow.
What about retaliatory tariffs from the European Union or other countries on your own products?
Yeah, I think, we have a strong business in Europe. If you have to cross-source, we can. I think the end of the day is really, how does it impact the consumer? Mm-hmm. Tariffs could mean higher prices for the consumer. And that is something that we will, tackle as the time comes along. Our products provide good value. Okay, and if they're in fashion and they're, we bring in innovation, the consumer is going to gravitate and open the checkbook to buy our product. So, as we think through it, we have contingency plans in place in case, different scenarios play out, and we'll be able to tackle through them.
Is it tempting to think about a 15% corporate tax rate and what you might do with all of that money that's not paid in taxes?
I have a wonderful tax group that plan different tax opportunities all the time. But, our view is, as good corporate citizens, we have to pay the taxes, we'll pay the taxes. And
that is the noble thing to say.
Yeah. And at the end of the day, it's very important for us to provide great value to our consumers and build the loyal fans, and that's what we focus on.
I got to say, not many of our guests could pull off head-to-toe denim. And it's not just that, it's also the shirt as well. Harmit, you're one of those folks who can do that. Harmit Singh, CFO at Levi Strauss, joining us here in the Bloomberg
Thanks, Tim. Thanks,
Brokers
Molly.
Studio.
Good to talk to you.
Harmit's going to be featured in the forthcoming issue of Bloomberg's CFO Briefing newsletter. You can sign up for it now at bloomberg.com/account/newsletters/CFO Briefing.
CFO-briefing.
Oh,
Don't miss that.
else that URL is not going to work.
It will not.
Check out that newsletter, though. You also just Bloomberg, or just Google Bloomberg newsletters. That's
Oh, yeah, I'm sure it'll come up. We got a whole bunch of them out there.
This is Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week. That is Molly Smith in for Carol Massar this afternoon. Molly Smith, Bloomberg News economics editor.
Wow, I think we've hit the trifecta of titles for me today. All about the same thing. It's good to be here, Tim. And I wanted to come in for our final guest of the day. Wow, we're getting really close to the end here. It's been such a nice afternoon with you.
It's been good to have you with us. And
Thank
we got a great guest right now.
We do, yes. So while LGBTQ acceptance is at an all-time high, so is bullying and discrimination. We're bringing back Sarah Kate Ellis. She's the CEO and president of GLAAD, and that stands for, help me out here, Tim. Oh my gosh, I should have had this ready. Sarah Kate's going to bring it in
Gay
for
and
us.
Lesbian Alliance Against Defamation, but everybody refers to it these days as GLAAD, so
That's
you're not
right.
alone.
That's why I was so reliant on GLAAD, but I should have had that ready. My bad. So Sarah Kate Ellis is joining us now. She's here to talk to us on Spirit Day, the world's most visible anti-bullying day of action in support of LGBTQ youth. Thanks for joining us here, Sarah Kate. You joined us back in June to talk about the complexities around celebrating Pride Day. Hopefully Spirit Day, a more positive day. Tell us about that and the celebration around it today.
Yeah, well, thank you for having me. And we are just GLAAD these days. We no longer go based on the acronym. So anyway, we do this. This is our 14th year. And this is about uplifting LGBTQ youth because we actually know they have it the hardest in this world. They're figuring out who they are. They might not be in accepting environments. They might not be in homes where it's okay to be their true and authentic self. And they're a little trapped, and we wear purple to let them know that we're standing with them and that we're standing against hate and bullying. And so this is the most visible day for LGBTQ youth to let them know that we're standing with them. And throughout the years, this is my 11th year doing Spirit Day. I've had kids come up to me across the country who are now adults actually, and said that when they were teens and they were living in their hometowns and they couldn't be themselves, they saw Spirit Day and it gave them hope. And it gave them a view into the future. And so that's why we do this.
Sarah Kate, so much has shifted in recent years, in the years that you've been doing this. And also, in the close to 40 years that GLAAD has been around, there's just been huge moments of transformation. One of the things I want to talk to you about today was the T part of the LGBTQ movement. Because right now, with less than 3 weeks to go ahead of the election, you see a lot of talk about what legislation is happening, how different people feel about anti-trans bills throughout the United States. It's such a huge topic of conversation. I'm just wondering, from your perspective, what the media is getting wrong in your view, what the presidential candidates are getting wrong, what you believe the electorate needs to understand about the trans movement in the U.S.
Well, thank you for asking that, because on this day of anti-bullying, the biggest bully in town is a presidential candidate who's running, Trump, and has been for the trans community, and is actually running ads in battleground states right now that is trying to use trans people as a political wedge issue. And I just want to say a couple of things about that. One is trans people are people, they're human. And I think there's such a small piece of the population too to give that so much emphasis when there are so many issues that are so important to Americans today. Actually, the latest poll asked about 22 issues that were important to Americans. The last issue was 22, and that was how people thought about trans issues. People aren't interested in talking about them. They're not kitchen table issues, and they want people to live in autonomy. That's an American value, to live the life that you love in your own terms, on your own ways. So I think that it is being used to create fear and to stoke hate, but it's not a value, American value, fear and hate. And so it's not polling well. We also did a poll at GLAAD that found out that about 50% of voters felt that politicians who villainized and victimized trans people lost them. They weren't interested in them anymore because they thought, if you treat the most marginalized people that way, how will you treat other people? And so I think it is a really big issue right now because it is being used to create fear in our society.
But it doesn't seem like it's working, to your point.
It's not working. It hasn't worked in the past several elections, actually, because there have been a number of politicians. So one thing that is really important for people to understand in context here is that 70% of Americans say they don't know someone who's trans. So that means that those people are learning about trans people through the media. And your initial question was, what is the media getting wrong here? The media is getting wrong that they are repeating or airing this hate and villainization of the trans community because it's not accurate. And so they're stoking the fires by just not giving it context. And so I think it's a really important moment in time for us. And I think it's an opportunity. At GLAAD, what we did was we created ads. You can see a bunch of them at herewearenow.com. And we're running them in those battleground states because it's introducing trans people to everyday Americans in their community. And that way we're connecting the dots and taking away the fear. And it's the same formula that's used for gay people back in the day.
Sarah Kate Ellis, thanks so much for stopping by Bloomberg Businessweek. She's CEO and president over at GLAAD.